There are three types of technical indicators. These are indicators that we need in order to find short-term and medium-term trends on the charts. And the second group of indicators are usually placed at the bottom of the chart and help to find bounces from current prices. And they work well in the Navy and do a great job of showing which times the Peary chart is bought or oversold, which times you can get in on a rebound trade. But there is a third group of volume indicators. And this group has been very undeservedly neglected. But in fact, volume indicators can give a lot of information about the chart, about who is dominating the chart now sellers or buyers, with what gap, what is the liquidity and volatility at the moment. Professional traders often use volume indicators in general with all strategies to get additional information about the market. But in this video, I want to share with you a simple strategy that is built on volume indicators alone and helps to find very short-term up or down moves quite accurately. This is the essence of the strategy to find very short trades on small games, which with a high probability will bring profit. So in order to add a volume indicator to the chart, we need to go to the Enter indicator. In order to install a volume indicator, we need to go to the Indicators menu, punch in a wedge, and add it to the chart. This is what the volume indicator looks like. And there's a popular belief that it shows what distance the chart has traveled in a time frame. But it really isn't. The indicator shows the difference in volatility, and the higher the column. On the indicator chart, the greater trading volume was realized for the selected time frame. The color of this column shows who dominated the plot sellers or buyers. If the indicator is green, it means we were bullish, green. The buyers won and pushed the price up. And vice versa. When the candle is red, it shows the dominance of sellers in the market. EI, and shows the fact that trades are for sale, that the amount of liquidity for sale is higher than the amount of liquidity for purchase. And as you can see, the program's column sizes don't match the size of the candles. That is, there could be a long candle that had a small trading volume, and a lot of misconceptions around this indicator that it just duplicates U-chart. I really don't. It gives a lot more information. And as I said, it shows that in a certain area, the sellers beat the buyer, or the buyers beat the sellers. And we can use that to understand that, to catch the moment, to catch the area where for several periods in a row, we had a nomination of one or the other, and use that to make a short-term trade on our strategy. We need to put up 5 minutes. For more advanced users, you can set 1 minute. Then trades will appear even more often, but they will need to be filtered more carefully because there will be a lot of market noise. I recommend that you start with 5 minutes after you've gotten the hang of it and consider other time frames. Basically, it's a strategy. The strategy can be called both very simple and very complex because the simple principle, the basic principle, it is clear, intuitive for any trader, and it can be used even by beginners who have just opened the terminal. The basic principle of this strategy is that we are looking for 3 consecutive columns of the same color. Let's find the first time we had it. Here we see 1, 2, 3 columns, same color, not green. So after that, we open an up trade. That's when we open the trade up and would have locked in a profit. Next, we look for the following point. When we had 3 identical candles in a row, right at that point, 1, 2, 3 candles in a row, we would also open a trade up. Keep looking. Here we have 3 red candles in a row. Here we have a sell signal, we sell and take profit. Then again, 3 red candles in a row, sell again, take a short profit. Next, 3 green candles in a row again. We can open a trade here, and over time, we have locked in a profit too. As you can see, the principle is very simple. Deals will appear a lot. There will be quite a few situations where there will be 3 candles in a row. But even in the segment I showed, there were at least 2 questionable trades that may have closed. On the plus side, possibly on the minus side, depending on how you would manage this trade. So we need to move on to the supplement. And the first addition that can improve the performance of this strategy is the use of market structure. As you know, we have three market structures. It's a bullish trend, a rising trend, when we have a rising bearish trend, when we have a falling chart, for example, in this case, and when we don't have a clear movement, we have a changing trend. All the time, the minimum maximum is roughly in the same horizontal range, and depending on the market structure, we can make different deals. For example, when we have a market structure, it's a bearish trend, a falling trend. We will only consider down signals, only the combination of 3 red candles as a signal. If a combination of 3 green candlesticks appears, such as, for example, here we will miss such a signal on a rising trend. When you have a rising trend, we consider only upward signals. That's when we get 3 green candles, we only open an up signal. If we had a down signal right here in this area, i.e. 3 red candles, we would have missed it, because this is most likely a correction, and it is not worth it. Not worth a bargain on this site. And when we have approximate equality between sellers and buyers, we can look at both up and down signals. Therefore, in order to improve the results of the strategy that I described in the beginning, we need to evaluate the market structure beforehand, and on the basis of this, we need to make trades either only up, only down, or both ways. If we don't have a clear trend in the market, that's the first rule. It's been enshrined. By the way, market structure is best evaluated on older games at least 15 minutes, but it's better to switch to the 1 o'clock chart and see what our overall structure is like. Here we can say that we have started a rising trend, which means that in the larger picture, we have a rising trend, and we should consider trades mainly only upwards. If we switch to 1 o'clock, we'd see a picture like this. We would see what we have and consider both of those signals in order to more accurately perceive the trend we have. Or you can put on the chart any trend, indicator, for example, moving average with a period of 200. It will show you the average result for the last 200 candles. And when you have a chart above this level, we have a conditionally rising trend. When the chart is below this level, we have a conditionally falling trend, and we only consider down trades. If the chart often crosses the moving chart, it means that we don't have a definite trend. And in a situation like this, it's better to basically not. Consider this as an ETF, and perhaps consider trades both ways. The following rules of thumb to improve your results are timeless figures. It is very good when our signal, for example, our 3 green candles coincide with some solid analysis signal. For example, here we see a pattern of engulfment. We have a green candle overlap the red candle, and after that there's a buy signal. We have 2 signals coinciding, and this reinforces the signal on the overall strategy. So what we have is more likely to make a profit. Or here, for example, in this situation, we have 3 red candles in a row. We have received a signal from the indicator, and we also see a funny figure here, a double top, which says we have a resistance zone here, and that reinforces the overall down signal. That's why I say that the strategy is both very simple, that getting indicator signals is quite easy. You see just 30 things of the same color. Open a trade in the same direction on the other side. There are so many important points that can help you improve the performance of this deal. And for this, you need to possess personal analysis, master graphical analysis, be able to chart resistance support levels, and look for reinforcement of these signals. Because many, even experienced traders say that it is better not to use volume indicators as independent indicators, but to use them in combination with graphical or other technical analysis tools. Be sure to try this strategy and record your results. Perhaps it will bring you a good result and you can use it as your main strategy, or perhaps you can use the indicator and its indicators as a supplement to your main strategy.